Welcome, everybody. Grateful to be with you. Jason Dodier and Jaret Grossman here, bringing you round two. So essentially, today's discussion is a continuation of the other day. Yesterday's episode, we talk a lot about personal improvement and how to really get ahead in a rapidly uncertain and changing world that we're in, thanks to the coronavirus epidemic. Today's episode, we're really going to look at how to be more effective in terms of interaction and collaboration, both during and post the COVID-19 pandemic. And really, what we're seeing here, especially when it comes to innovation and necessity, this global and novel virus has kept us contained in our homes. I know I've been certainly hunkered down here in New York for a number of days, same with Jaret in Florida. And it's starting to reorient day-to-day life, our relationship with family, certainly the outside world, and even state and local governments. Some of these changes, right, experts have said continually they expect to see coming and being monitored over the coming months or years, and things are going to feel unfamiliar and unsettling. How long will particular countries stay closed? Will touch become taboo, right? What's going to happen to restaurants and other service industries? I think truly that, business will be towards ensuring the U.S. is prepared, right? Moving forward, we're going to be looking at investments, next generation technologies. A pre-COVID-19 poll I was looking at the other day showed that no country was truly prepared for the pandemic, which was intriguing coming into it. One thing I want to start the conversation with, Jaret, is really when you look at some of the next generation networks, solutions, innovations, right, outside of the stuff that we started to see going into the crisis, cloud computing, data security, sensory devices, and even now we're seeing, I think, an uplift in sensory devices in terms of thermal fever detection and things of that nature to kind of raise a flag if somebody's coming into a facility, whether it's an airport, a hospital, or a pharmaceutical business, to be flagged immediately by someone if they have a temperature that's out of the normal bounds. And I think there's going to be a lot of emerging technology and investment going into now the healthcare space and biotechnology. What are your thoughts around this going forward, especially given, again, your entrepreneurial background and investments and things you've done in the past around entrepreneurship and innovation for a current and post-COVID-19 world?
Jason, you hit on a ton of good points there in a lot of industries. Obviously, there's going to be a ton of innovation that's coming out of healthcare, future pandemics, and so forth. I know there's a lot of CEOs that are giving a lot of TED Talks on saying that we're not prepared and so forth. So this is definitely an eye-opener about what things we should take the initiative on in terms of healthcare. Providing healthcare for all is, quote by politicians and so forth. It's a little harder to do that in a practical sense, but we obviously need to do some reform in terms of healthcare itself and the costs involved, but also in terms of pharmaceutical companies, in terms of immunity. And you mentioned it, technology in terms of being able to detect these things, whether it's a virus or other things, cancer, heart disease, and being able to prevent that stuff in the future. There's going to be a lot of innovation that comes out of this. That's just the way that things happen. For instance, respirators. I'm sure there's going to be better respirators that come out. There's going to be obviously a lot more that are going to be coming now that automakers are trying to get in on this and so forth. So we're seeing deficiencies. But, what's really going to advance things, and there are people who are afraid of it, and maybe they should be, is 5G, right? So whether it's the technology itself that has ramifications and side effects, which lots of scientists have dispelled kind of some truths in terms of the effects and ramifications of what that's going to have on people in terms of their health, and they might want to look at that long term. But Also it's the technology that's built on top of the 5G in terms of it's not just a faster phone going from 4G to 5G, for instance. It's how the capabilities change in terms of tracking, in terms of the data that's being consumed and storing, and who owns that data. So you mentioned it, being able to track people who have the virus and the thermal technology and so forth. That you could just pick that up off of a video camera. But then in order to do that, you're grabbing facial recognition and you're grabbing a whole bunch of data. And they already want to start tracking people in terms of cell phone, using our cell phones to track. Now, obviously, there's huge privacy concerns with that, with everything that came out with WikiLeaks. A lot of American people were upset about, what the government has done in corporations and so forth. So, it's all a balancing act. The pendulum kind of swings too far, but we like to bring it back and correct it and come to center. But, people have to really start, just thinking ahead in terms of what people need, and people want to extend their life, their quality and enhance their quality of life. So if you could create some businesses or ventures that feed off of that concept, you're going to do very well coming out of this. Yeah, so Jay, in terms of the outlook for people, though, do you think we're headed towards a recession, a depression? And what is your takeaway point in terms of what you could give to the public in terms of whether they're going to be laid off, should they start a business? Because there's going to be a lot of stuff that comes out of this.
I think you hit on some good points, and regarding to the environment that we're in right now. People have to be, and companies need to be nimble and agile. I want to pause and bring up something I saw in the news today that I thought was really encouraging, and it's a story that needs to be shared. And the company Dyson, many people know Dyson. I've got one in my house for vacuum cleaners and hand dryers, but the coronavirus has forced them to shift its focus to ventilators. So James Dyson, they designed a new ventilator in just 10 days, and now they're making 15,000 of them to fight COVID-19. He sent a letter, I think, to employees just the other day, confirming the British government's order for 10,000 units. So this is the type of stuff that we're gonna see more of, and I think it's going to cause companies, major organizations, to kind of go back and look at their supply chains, look at their the overarching value proposition of the business and their business units, right? Their lines of business, and it's going to help them maybe aggregate and focus a little bit more for the future. In the past, a lot of companies were investing in businesses that weren't generating a good return. They weren't in the best interest of the community and their stakeholders, and they might have been laggards. Instead of they might have been cash cows for a long time, and then things change in the environment. You've got to adapt. This current situation is forcing businesses and industries to be extremely inventive and agile. So I think with downtimes like we're seeing now and major issues, there is an opportunity to kind of go above and beyond and get creative. So I think you're going to see more people, more businesses like Dyson reinventing themselves, and more startups kind of coming to the forefront to drive things. But I also think, to answer your question, I don't have a crystal ball. I can't say, the market's been strong the last couple of days, but we haven't got the latest report. There's some rumblings about what the unemployment numbers can look like, and it's very scary. So I think it's going to be very cyclical. We're on a roller coaster right now. You got to buckle up. But I think in terms of the environment, and if there are recessionary times upon us for a longer period, there's a couple things you can look towards, right? One of the top things is value, right? You could get things cheaper than you normally would. Asset prices will get knocked down. So there's no better time to potentially make investments in real estate, financial markets for sure, and start to procure services to grow your business. If you had an idea or something in writing that you want to do for a long time, right? You can potentially hire more better qualified people that are looking for work. You could change suppliers if you already have an existing business, right? It's a good time if you ever wanted to take advantage of trying out somebody new in terms of products and services. There might be companies that are desperate in these times to find new partnerships, and companies that have an innovative way of delivering and executing, right? More tax incentives is another thing. We talked about this on the episode yesterday with the stimulus package that's being voted on right now in the House of Representatives. There's going to be a lot of incentives, both state and local, that are going to help provide benefits to business owners. Additionally, Jared, just a couple other points is suppliers are giving better credit. That's a nice thing. Good PR today. I don't know. I'm active on Twitter, right? I'm frequently on Twitter, following individuals, posting out there, and there's a lot of goodwill in the community right now. And if you've got a business, especially a small business, if you're a small restaurant chain or a mom and pop operation, you're getting a lot of support from individuals, local governments, and social media is clearly representative of that with the number of shares and likes and things of that nature. So I think ultimately the situation, depending on where you are, it's good to reinvent yourself. You can get a jump start if you've had a business that you've always wanted to do, or you've got the blueprint in place. Now might be a good time to roll it forward. And I think ultimately, at the end of the day, too, you should be consulting with close friends and family. And if you can't, if you're having a rough time, if you've got friends and family that can help support, that's also another option. So that would be kind of my snapshot, Jaret, given where I see us right now and kind of where the markets and society is headed over the next couple of months. A lot of uncertainty still, though.
Yeah, I mean, there's a ton of uncertainty, and some economists are saying, a $2 trillion injection, if everything goes smoothly with this stimulus plan, that's a large percentage of GDP. So, that could make up for a lot of the lost revenue and so forth. But it really depends on this timeline, I think, Jay, how long we're going to be out. And if it's a matter of weeks, I think we could recover without facing huge recessionary problems or potential depression. But if it's months, I mean, how is there any way around it? It's inevitable, right, Jay?
Well, so plug it into that too. One thing that's really important, Jaret, and I wanted to get your opinion on this too, because I'm still learning, right? I'm active on Twitter. I'm on Facebook a little bit, LinkedIn, of course. There's a lot of social channels out there today, and I think people are trying to get quick, reliable access to critical information, to individuals both in the science, political sphere, business community that they trust, that they followed for years, and they want to be able to track what's going on and stay up to speed on that stuff, right? And data is the new gold. Data is the new oil, rather. Data is rampant, and people want to get content again directly in real time and kind of curate from all the social platforms that they trust. Now, I know this is something that you have a special expertise on, and you've been working on some stuff in the background. It'd be great to hear a little bit more your perspective there, and maybe share a bit about the work you're doing behind the scenes with Scroll.
Yeah, so Scroll is a better social media app and experience. Obviously, Facebook and Instagram came along and took a significant amount of market share away from Google and YouTube. And the reason why I believe is because Google and YouTube were mainly centered around the ability to search for something, which is obviously amazing in terms of an acute pain that you're experiencing. You know what you want. But in an environment where you don't know what you want, which is where most people live if they're not experiencing some problem that they need to fix immediately, they want things coming to them. And so that's what Facebook and Instagram, largely is surrounded by. That concept is basically a scroll feature of constant variety. And people are addicted to it, and these firms spend millions of dollars to understand psychology of people and what makes them addicted to something in terms of their layout and everything. But a lot of people are fed up with not only the privacy issues that Facebook and Instagram have, for instance. They're fed up with the lack of trustworthiness. Right? Is that, how do I know that this content that I see is real or whether it's fake or whatnot? And they put the onus on people essentially to follow the sources that they want to trust or feel like they could trust to get the maximum benefit out of it. Because if you just basically let Facebook's algorithm and Instagram's algorithm go to work on you, you're going to see a lot of content that you're not really privy to in a way. So we understand a lot of these flaws in the existing social media space, and in social media you can get some incredible breaking news, better than what you're watching on CNBC or any of the mainstream media networks. So if you're like into the markets, if you're a trader or whatnot, you want this news to hit you before it does anybody else, because that's going to get you ahead of the curve, right? So, and not only in terms of investing in other companies, but in terms of what you should be investing your time in. Let's say if you own a company, or what ventures you should go down. So, we're just basically crafting a better social media experience that hinges on a lot of these things with Scroll. So, it'll come out, relatively soon, and we're, excited to get a nice base, But, Jay, what do you think in terms of how this pandemic is going to affect future business for not only the U.S. but the world at large? How can we get things back to normal, and will they ever get back to normal? Essentially,
I just want to say, I think it's really neat what you're doing. That's what you're creating as some of the businesses that can thrive in this environment, essentially leveraging algorithms, right? If I understand correctly, to provide trustworthy news sources, right? It's easy to use, good brand recognition, and it seems like it's a proven strategy. So, looking forward to learn a little bit more and share updates as things progress. If you look at the environment, I guess, to answer your question directly, one of the things I heard, I'm constantly looking at surveys and watching the news and reading news articles. It seems like the consensus, Jaret, from many leaders, particularly CFOs of Fortune 500 and other large organizations, it may take up to 6 months for businesses to truly get up and running normal operations. China, Korea, Japan are starting to come back online, but there's been reports that it's a very delicate situation, right? Coming back online, people returning, opening the economy up, going back outside, but there's a risk associated to that, right? If you haven't flattened accordingly, it could be extremely problematic. But there has to be a medium in terms of turning the economy back on versus just everybody staying home, can't go to work, no business, and that's a very, very slippery slope. I think personally, the first timeline of like 1 to 2 months, and I'd say we're about half a month essentially into it, right, is highly unlikely. But America could, if people are taking up social distancing very seriously, which I believe a lot of folks are, especially in major markets where there's people are in close contact, and if the weather gets warmer and it's found out that maybe it's not as serious a pathogen as folks thought, if all those things kind of go right, and there's immunity is starting to be generated and things of that nature, it could be expedited, Jaret, right? I firmly believe that. Again, I'm listening to science. I'm listening to scientists. I'm listening to those leaders, because those put me at ease the most. And truly, they're doing a great job of kind of explaining what's happening in a manner that is that's achievable, right? And then you've got, it's really broken down into months. Then you got the groups that are looking at 3 to 4 months. So again, it gives a time for hospitals to adapt a little bit more, ventilators and respirators, and understand what treatments might be best suited, and then you could start again to handle and focus on the most high risk cases, and then you could start to see things come back to normal. I mean, at my alma mater, Georgetown, I was watching today. Michael Stoto, he's a professor of health systems administration, essentially said that there are 3 variables that dictate the spread of the disease. I think this is really important for our audience to hear. One is how many people the average person encounters in a day when transmission could take place. And this is, whether it's face-to-face or from touching the same surface. The chance that the virus will be transmitted to each of those interactions, and then the proportion of people that you encounter who are themselves infected. And that's why you saw in the news recently, it could be considered a crime, like a high crime, to go out if you have the virus, right? And putting other people at risk. So my answer, that's a long way of me saying, presenting the different scenarios, listening to the experts, and saying, truthfully, it's hard to put a number on it, but I think things will start to normalize in 5 to 6 months is what I would say, based on the timelines and the discussions I've been a part of. What do you think in your perspective? And again, you're in a warmer part of the country, getting a little bit different of a perspective. I'm in essentially the epicenter of this in the U.S. here in New York City. What are you thinking?
Yeah, so New York is a hot spot, and no other place in the country, whether it's California or Chicago or whatnot, is experiencing what New York is. Now, there are reports that it might spread at those areas first, and become hotspots of itself. But we're hearing a lot of good news too. Like, for instance, in The UK, there's just been reports that have been released where initially they were doing all kinds of projections. And this is, again, an innovation path that somebody can take on. Is there's going to be a lot of money going towards models, right? Models of pandemics that are accurate and so forth, because you see the financial consequences. So an accurate model, people are going to pay a lot of money for that. But the initial models were showing that this could result in 500,000 deaths in the UK. Now they're coming and basically changing their whole tune and saying, you know what, now that we have more tests available, more people had it, the mortality rate is probably lower than what we anticipated, or the contagion rate. And now they're anticipating, under 50,000. Some are saying under 20,000 deaths in the UK alone. I mean, that's a drastic difference. That's two entirely different models, right? So, I think that there's probably some optimism here that this isn't going to be one of those, movies that you see where everybody dies, where some people were really fearful of. But again, there is some fear that if this were to hit all at once and overwhelm the hospitals, they can't handle it. There's not enough help. There's not enough assistance, not enough equipment to be able to do it. But for it to go from, like you said, from everybody working at home to all of a sudden everybody's going to go back to the way their lives were before, even if the mortality rate isn't that high for this, it's just not going to happen. I mean, look at what's happened in the sporting world and the entertainment world. Mm-hmm. Practically every concert and venue is shut down for the next 6 months, essentially. There's probably going to be no NBA season. Half of the PGA Tour season has basically practically been canceled. Olympics postponed. So any kind of big venue, if you are in the business of where you hold conventions or conferences, you're going to be affected. You might not have business for a year because, how is the football season? They're very active in terms of trades right now and stuff. But how is that going to play out? I mean, you're going to have a stadium with, 50,000, 80,000 people just sitting next to each other. I don't think it's going to happen so fast, right? So this is, I think you're right. Maybe 6 months to get things up and running normally is probably the course. But it's going to be basically industry by industry. From we have essential businesses, and then we have non-essential businesses. Right now, there's two fields or camps, so to speak. But there's going to be more fields and camps. So it's going to be what's essential in terms of an economic perspective, right? And that's going to go back first. But they've done crazy restrictions in New York. I don't think they've handled it, perfectly. And I don't know if everybody does, but you don't want to put restrictions on things like dentists and private, medical practitioners, because that eases strain off the hospitals. You want them operating at full capacity and providing more resources for urgent care centers to take strain off of hospitals, stuff like that, right? So I think you got to speed some things up in some areas, and then other things, entertainment, large crowds, and I hate to see restaurants suffer, but forcing people to have a certain seating restriction. I mean, these rents in Manhattan are huge. I mean, Cheesecake Factory just came out. They said they're not going to pay rent this month, right? And maybe
I'm praying I don't have to pay rent.
Yeah, exactly. So I mean, and that's going to trickle down to the landlords, and then the mortgages that they're carrying and the debt that they carry. And there are certain economists that are saying the whole commercial market is at a prospect of imploding because it was at a bubble already, And I don't know if that's going to be the case, but I think there's going to be a lot of lax policies. I think you're already seeing it with a lot of financial companies, credit card companies that are allowing deferred payments and forbearances and so forth for several months. And some are not. And that's kind of unfortunate, especially if they have the cushion or the capital to absorb a little bit of a drop in revenue, because we have to care about people at the end of the day. So, yeah.
Jaret, when you were talking there, you talked a little bit about economics and and obviously the major shift, right? There's an impact across the board for all industries, organizations, what have you, individuals. economics, one of my favorite classes. It makes me think of education, right? Let's maybe switch gears and hone in on education a bit, right? Higher education in the U.S. is more of an international community than ever. I mean, my freshman year, one of my roommates was from Saudi Arabia. We were part of a big international community. Absolutely loved it. It was one of the things that I remember the most fondly in my lifetime, and one of the reasons I lived overseas for many years. And it was a great starting point. That that social human interaction you've got in university, and I forget the number, but it's a major percentage of students today that are coming from abroad. Now, educators had already been faced with major problems, right? How do you teach really hard concepts, imaginary numbers, quantum physics, right? Going deep into some of the most, interpreting some of the most advanced and rich novels of our time, right? How do you produce conditions that can optimize learning? And now you've got an environment where not only the concepts are getting more and more difficult, assessments to evaluate how well students are prepared for future learnings are being put in place, being rolled out through institutions, both K through 12, and of course colleges, many colleges. But now with the coronavirus, you see this shift now. Folks are young and obviously at the college level are getting homeschooled, either at home by parents if they're in a community that the schools perhaps aren't prepared to do virtual learning, and then universities are having to really ramp up. There's big costs associated with that. They might also realize certain efficiencies that could change the model completely. So how do you see, video chats, virtual tours, are they going to generate the same level of applications and enrollments if this continues moving forward, right? If high school seniors can't go in person to look at their colleges, and how are they going to, how are universities going to adapt moving forward? Is it going to be more of a hybrid approach? Will there be more options to kind of maybe complement existing in-person learning methodologies to help fortify these really hard concepts? And then the whole social interaction thing, that's always going to be there. It's absolutely imperative. And you've got this AI era that is upon us, right? So talk to me. Tell me, how do you see that? I mean, you've done, you did law school, you did an MBA, you did your undergrad, you ran the gamut, and you've done the School of Hard Knocks. What's Jaret Grossman's view on this?
Yeah, so we went to obviously the same undergrad together, and we had a great experience. Just a disclaimer: yes, went to law school, MBA, did half of it. Then I sort of rethought whether I want to invest more time and money into that education. For me, it was a little more of a I had to come to terms of, am I really doing this because it really is my purpose, or was I a little ego driven, trying to just put letters at the end of my name kind of thing? And I came to that conclusion that it was a little of the latter at the time. So I sort of, took a step back there. It doesn't mean I won't, revisit it, but just a disclaimer there. But there was a major indictment today, Jay, for the Maduro regime, who apparently had a plan to import hundreds of tons of cocaine into the United States. And so they set up like a $15 million reward to capture this Venezuelan regime. And not too many people know about what's going on due to the coronavirus, but they said that
Venezuela, right?
Yeah, Venezuela, that's right. So they said this is like the first time they're doing like a virtual conference to do indictments and so forth, right? So it's it's unprecedented times, but this is going to show a lot of technology that can sort of be released. And I think you segued it perfectly into what's going to take place into the college environment and the academic environment and so forth. I think we got to start off with this, Jay, is that the academic system in terms of universities and colleges, with the amount of, and we'll go into in future episodes, like how to handle this student debt crisis, for instance, but it's been a problem for a while in terms of, are people really prepared when they leave their undergrad to make enough money to not only pay their student loans, but have a great quality of life? And is that degree worth it? And a lot of people have been second guessing that. And a lot of CEOs and executives from Elon Musk are basically saying, we'll hire people who don't have a degree. It's not a necessity and so forth. So you and I got a wonderful education at our undergrad and our post-grad schools. But that's not the case for everybody, and that's unfortunate. undergrad was really focused on preparing you and making sure that you kind of understood how to create a business plan and how to read balance sheets and really how to market a company. We had to do a lot of off off campus activities to be able to learn that stuff, right? Whereas a lot of universities, it's just go to a lecture hall with 400 kids and you're just reading a textbook and then regurgitating that back on a test. And is that value worth $40,000, $50,000, $60,000 a year? And I think that it's just it was a bubble. It's a bubble that's ready to pop, and this is probably going to speed that up, right? So you're going to have there's always going to be money towards the big universities, whether that's your Ivy Leagues, your Ivy League schools, and even the tier directly below that with big athletics programs and so forth. They're going to have money and they're going to have the funding and the capital and the rah-rah and the support behind it. But it's those other universities that are really going to have to think. And what created this? It's really when people just were taking out student loans, they didn't really understand the concept that you're taking on hundreds of thousands of dollars of debt to do this, and that you're going to have to actually pay that plus interest. We just always have been conditioned that you get a degree, at least from our generation, Jay, and it's kind of changing, but you get a degree and it's going to pay off. And it's we're the first sort of generation that is projected to not have a better quality of life than the generation before us, right? And that's sort of the first time that that's happened in America. That's a big problem. It's a serious problem, right? So the academic environment, it has to change. And that means lower tuition costs. You can't just keep having the government, fund these schools through loans and they raise the tuition, and then people who are actually paying that tuition, out of pocket, are going to continue to pay that for the market value. There's got to be a fair market value for what you're going to receive, and I think that technology is going to supplant a lot of these universities in a big way. So what would you say in terms of the networking over Zoom that we're experiencing and other technology mediums and fireside chats and panel events? Do you see a huge impact being able to supplant a lot of the traditional university education that people are receiving, and what do you think that timeline is going to be? Because I hear some people say that it could be as soon as 10 years. Usually change takes a long time, stuff like that, to supplant an entire industry that's had its foot for over a century. So what would you say?
Look, I mean, it's no secret. Networking is one of my favorite things in the world. I've met some really remarkable folks just by having, starting out with some basic discussions and being in the right place at the right time and taking initiative, getting up, going to things that were of interest to me or things I wanted to learn more about. And, believe it or not, it's clear universities actually are a major hub for these types of events, whether it's panels, fireside chats, right? I mean, I have a nonprofit that I co-founded years ago, headquartered in Rhode Island, and we do 2 panel events every year and a networking event year end, and usually one, if not both, sometimes have been at universities. And we open it up to students and all age groups to kind of get together and have good social interaction. So I think it's going to be a little bit of a hybrid. We actually have an event we've got planned on diversity and inclusion coming up in June, Jaret, and we're planning to do it in person. But if not, we're going to shift and we're going to probably do it off of Zoom or some other medium. And I can tell you, I actually tested this out for the first time the other day. So there's a group called Connectpreneur. It's an incredible forum of leaders across community, CEOs, entrepreneurs, VCs, angel investors, founded by a gentleman named Tian Wang. He's a mentor, good friend of mine, and they do fireside chats. They had over 750 people log into that, Jaret. And I can tell you, yes, would I have liked to have been there in person and afterwards networking? Certainly. But they did a superb job of just driving the discussion. You could really take a lot of notes and listen intently, in the comfort of your own home. You could see who was, most people were on video, so you could see them and you could connect with folks that you might not have seen in a while or people you might wanted to have connected with. And, there was a lot of social interaction and tweeting and real-time I thought it was smoother in terms of real-time questions and interaction. So I think it's going to be a hybrid, right? And there might be more at the forefront initially, but ultimately, I think it's a way to engage even more and stay on top of things and understand what's happening in the community, because it doesn't take as much in terms of upfront capital and planning and all that stuff to do a remote session. So I think you can, especially organizations like Connectpreneur and others that are doing this, are going to benefit a lot. And that's why I'm excited. Our speaker today, Brian Park's a startup evangelist. He's an advisor. He was actually the global CEO of Startup Grind. It's one of the, you've heard of Startup Grind. It's one of the largest high-tech startup communities in the world. I think they've got over 2 million entrepreneurs in 600 cities. And he curates and moderates a lot of these panels. So he'll be able to dive a little bit deeper into this topic. But I think across the board, when you look at the chats, the networking, fundraising pitches, even, right, for companies that are in the startup community. Yeah. And again, he'll give a little bit more of his perspective. But I guess, Jaret, I want to close out before we go deeper with Brian and just ask you, looking at that again, as an entrepreneur, as somebody that's successfully built businesses, how do you see, when you look at and you talk to your peers that are, maybe looking for friends and family or a Series A or beginning to develop a business, what should they be thinking about right now? Because time is money. They need to be able to fund their organization. Do they get leaner? Do they make short-term cuts? Obviously you don't want to impact your intellectual capital, your patents and the stuff you're developing with your engineering and software development team behind the scenes. What would your advice be for those startup founders that are trying to raise money and pitch right now? Right?
Yeah, absolutely. Great segue here. So basically, the VC world has gone through several different phases, So when it first came really strong, when you're talking about the dot-com era or whatnot, there was just this real rush where everybody thought that any kind of idea that would come out would just basically hit it big, essentially, right? And a lot of them did, and a lot of them made money. But then, sort of once that dried out, then there were a lot of people who invested a lot of money in these things that didn't actually pan out, were left holding the bag. And then, like anything, the pendulum swings. And so it's basically swung to a point where VCs, largely now, it's very hard to get them to invest in something that doesn't already have a proven model. And meaning a proven model that you're showing a good amount of revenue and probably strong profits also. And just a good business model that's sustainable long term and doesn't have much of a legal gray area and stuff. So they're treating it. The VCs, obviously got smarter and so forth, but they're treating it almost like a bank would treat it, right? That's sort of how this shift has happened. It's changed where they're looking at it based on your assets and the collateral and the cash flow and the balance sheet and all that. Is that solvent and sustainable for me to invest in? So they're looking at it from the perspective of, is this a sure thing? And that's not entirely sustainable. The pendulum swung too far because a lot of people who have great, products and great businesses, and they don't necessarily need somebody else's money once they've already, got everything launched and operational. And of course, you want some money to be able to scale it to huge numbers. But a lot of the times, those people just look for an exit, or they'll stay on as an advisor or so forth. But for startups particularly, I think you're going to see that shift of it coming a little bit more to center, where VCs are going to realize, in order for me to do deals and get in on the ground floor with some things, I'm going to have to invest in something that's not necessarily as proven as I'd like it to be, and take a little bit more of a risk. That's what you're in the game of being a VC. You're not a bank who's loaning to try to get 6 or 7% interest, or you have some other funding companies that are doing exorbitant interest or so forth. So in terms of specific sectors and industries, what you should go down if you're looking to get into something, I think you got to just follow the stock market a little bit and find out what individual stocks took a huge dive through this coronavirus and which ones are going to creep back up. And those are the ones where that innovation needs to happen there, but that there's going to be money flowing in those spaces because they obviously want to see that industry survive. So otherwise, they would have just let it plunge and plunge, right? So you want to follow where the money is, and obviously, epidemiology, pandemics, health. This is going to be the new wave of where VC funding is going to be hitting.
Yeah, and I think, just closing out the episode, right, to what you were saying around the VC community, I think there's going to be a major push if companies are building solutions around testing and diagnostics, hospital equipment, treatments and vaccines, right, or monitoring data infrastructure. All that stuff's going to get very, very close looks. I mean, there's still a lot of dry powder on the sidelines. People are looking to make investments just in companies that are going to have the biggest impact during this epidemic and for the years to come. Because again, the businesses, investors are going to be looking at things a lot, I think, with a different lens. They're still going to be looking for companies that have big upside, returns in investment, returns in invested capital. But there's going to need to be a lot of innovation and a much bigger allocation of capital towards treatments, vaccines, and hospital equipment. So again, curious to see what Brian's take is on this. But Jaret, another great session. We're obviously going to continue in upcoming sessions talking through the current situation and different ways to cope. And I'm excited for the next topic to really dive a bit more into depression, anxiety, and just the things that can happen to individuals when you're in an environment where you're isolated and away from loved ones, friends, and family, especially if you're single. So appreciate everybody's time today and looking forward to catching up with you soon. So Jaret, it's been a dynamic discussion so far as we've talked about some of the necessities around innovation. We've looked at recessions being a good time to start a business, how folks can stay ahead of what's happening in the community, and really what the impacts will be from the pandemic for future businesses within the US and the world at large. And to kind of take that discussion a step further, we're going to have for me personally, a bit of a blast from the past. A really good friend of mine is here in the studio, Brian Park, and he's going to be providing some of his unique perspective around effective integration, collaboration with an eye into the entrepreneurial world and startup space. And Brian's uniquely positioned to tell us about that because he's a long-term startup evangelist. He's an advisor, angel investor. And how I met Brian was at a Startup Grind event in Washington, D.C. when I was living in the D.C. area. He's the managing director he's the director for Startup Grind in D.C. and he's the managing director at the SparkLabs Cyber+Blockchain community, which was formerly the Fishbowl Labs. And, with that said, Brian, first and foremost, thank you for joining us on the show. We're grateful to have you. And one of the things I want to start and kick off with is maybe you could tell us a little bit, what have you been seeing in the community and among the people you've been working with, interviewing, the events you've had, the startup world? How has this pandemic impacted speaking tours? What do you see from entrepreneurs in terms of their ability to raise capital now, in terms of pitching, talking to potential investors? And also, what are some companies you've seen that are maybe uniquely positioned to benefit their companies, but also to benefit individuals in general that are now working from home, remote, companies that are building their digital work plans and organizations? And these are businesses that maybe are not so much mainstream, like the Zooms and Slack and even Peloton on a health and wellness standpoint. So would love to kick off there and maybe just a little bit more about your background as a startup evangelist for our community.
Thank you. And also, first and foremost, those who are out there, just stay safe, stay at home. Okay. Is there anything that comes out of this interview? Stay home. Okay. But thank you for that. I would say, first my background. So actually, I after engineer school, I actually was in New York and worked for a very big iBank, Merrill Lynch, for a couple of years, and I was actually doing a lot of their high frequency speed trading platform, and from there. I actually met a woman who's the girlfriend then, who's now my wife. She was like, "Hey, you should come down, here to DC." And I'm like, "Come on, I'm in New York. What's in DC, right?" She's like, and again, around this time, it was like 1990, 98, 99. And she's like, "Oh, I don't know. It was a company called AOL." I'm like, "Oh, I've heard of that company." And back then, I mean, I don't know how old your audience is, but AOL was essentially Google back then, right? I mean, it was like center of the universe. And so one weekend I came down here, interviewed, and then the following week I got hired. And so when I was there, I basically worked there for a couple of years on the personal finance channel. That was the largest channel back then, about 50 million users. And that's when I kind of really caught the entrepreneur bug, because a lot of the folks there, I was thinking they were, were they being sourced from the local, ecosystem, were they government contractors or engineers or things like that? They were actually from all over the place, right? They were coming from Silicon Valley, New York, and so it was really awesome to sort of experience that sort of culture. And so then after AOL, I spun up three different startups. One was a SaaS company back then. I'm surprised it was an online company. They're calling it SaaS now, but another one was a GovCon, right? Government contracting, and then another one was a little widget, like a little mobile widget I created. But so the one company that actually was somewhat successful was the GovCon, and I'll explain a little later because I know there's a little part questions you guys have for government contracting. But really, that was like a time and place where there was, this has happened right after 9/11, and there was a new sort of classification for companies. And so we sort of took on that certification and then grew the business there. And then after that, that's when I had joined Startup Grind. And, Startup Grind now today is the largest independent entrepreneur community in the world, right? We have 600 chapters and about 2 million entrepreneurs. So have a pretty good depth of the spectrum of startups and where they are and where they want to go. And so
you have one in Boca, Brian. That's where Jaret is.
Oh, well, we do have a Miami chapter, and I think a Fort Lauderdale chapter. So I don't know if that's close enough to you, but we do have a chapter, so I can hook you up with.
Nice.
So yeah, so then now sort of I guess the outlook that I've seen. I mean, this outbreak happens so fast, so quickly, and it's almost like a tsunami, right? You see it, happen in Wuhan, and it's like, okay, well, it's probably contained there, and then it kind of spreads and spreads, and it's like literally in 3 weeks, it just swept the world. And here we're in an environment where we never, in our lifetime, we've never experienced anything like this, where everybody at the same time is experiencing, stay at home, like literally a lockdown, right? We never experienced that. I mean, I would even say, like, I don't even think that we've even experienced something like this, even a world war, right? In the world war, it's like it's regional, and like economies are still running, but like never did you have like the whole entire world shut down for a couple of weeks, right? And right now it's a couple of weeks. I mean, who knows? Maybe this is going to go on for 2 or 3 months, but then now it's like entrepreneurs, startups all over the world, they never ever experienced this type of scenario. And so now, talking to a lot of startups, and they're like, oh my gosh, what do we do, right? Because as you know, with startups, with entrepreneurs, and they're kind of they're also kind of operating paycheck to paycheck, right? Funding to funding, because like funding is like with the run rate, right? What you have, it's like, okay, I think I can operate this business for the next 6 months or 12 months, right? Ideally, you want to get for 12 months, but now it's like, there's no revenues coming in, right? And then now you have to support your staff, and then you still have to keep your operations going. Now, like every single startups are looking at, how do I keep us operational afloat, and how do I have basically just money in the balance sheet, so then we can get through this, right? And so we're in the third week, and now they're saying June, right? Like May, June. And so I'm actually really, really, really worried about what's going to happen, and like think something's going to happen, right? Like, how do we get people back to work, right? How do we get back to work, and secondly, how do you get the confidence back after we go through this, right? Because as you know, like consumer confidence is very hard to sort of once that thing falls down, like how do you rebuild it, right? And everybody thinks it's like, oh, it's going to be something that we can just kind of build up really quickly, right? I don't know. So, yeah. That's kind of like my state of mind right now, and nobody knows right now, right? What's going to happen, right? I sort of have my sort of my outlook, what I think might happen. But I'll let you guys ask that questions a little later in the interview. How about that?
Brian, are there stay-at-home orders now in Virginia in place?
So in Virginia, the governor just issued a stay-at-home till June 10th.
Wow.
Yeah. So, and really, what that is stay-at-home is just like, it's not shelter in place, which is basically, shelter in place is like, when there's a tornado or there's an active shooter, like,
Sure,
right? But stay at home is like, just stay put at home, but don't do anything else. Don't. And the thing is, you can't do anything. You can't go anywhere, right? Except for the grocery stores and some of the restaurants, they're closed. And you can do carry out and things like that. But yeah, right now in Virginia, it's pretty much shut down.
So Brian, these startups in particular, again, a lot of the startups you've hosted at Startup Grind or across the country, and especially when you're stuck staying at home, and especially ones that had some good promising ideas, and they're pre-revenue, for example, right? What's the recommendation? Typically, you could try to go to friends and family, but friends and family might be in a compromised position as well right now. So these businesses that were ready to kind of launch right now, and you look at how the pendulum has shifted, right? The dot-com bubble, the 2008 crisis. It's very different. We can use historical context, even for the COVID-19 pandemic. You can look at the Spanish flu, and you can look at world wars. You can look at Fukushima, major national events, and see how GDP responded, markets responded. But it's a unique thing we're talking about. We're talking about startups and entrepreneurship. It wasn't as prevalent back then. The community wasn't as developed with venture capital and private equity. So what do these businesses do that they got everything in place ready to take off, but now they just, what are you encouraging them when you're talking to some of these founders?
Yeah, so really the parameters for investing from an investor's point of view has certainly changed. So I always say, so go back to basics, right? Like, back in the 1920s, how do you get anybody to help fund your idea, right? You have to show them that you have traction, that you actually have revenue, right? And so that's kind of like what the cash is king, right? Like, you have to show revenue, right? And that's what really is going to really shine. And oh, by the way, like that was really the sort of the gold standard, throughout the ages, right? If you had a company that was getting, say, hey, we're growing, 50%, a month, or double digits, or even triple digits a month in user growth, and then you had another company that was saying, hey, we're growing double digits, triple digits in revenue, right? Like, they would take the company that has revenue, which, by the way, revenue is usually a reflection of also user acquisition, right? So, and really, it even then, with that sort of framework, it depends, right? So if you're a consumer versus enterprise, consumer, yeah, you're trying to get user acquisition as fast as possible. That's one sort of idea. And the other is like, hey, we're getting these accounts from Fortune 100 companies, 3 or 4 of them every month, and we're growing like gangbusters. And so again, those sort of two sort of ideas, sort of when investors take a look at that, they're like, okay, which one should I pick? Right now, it's totally revenue, right? And so if you tomorrow if you're a startup right now in this environment, and you're booking double-digit growth, month to month, and you're getting accounts, like, you're going to get funded, right? No matter what the outlook is. And so look at the open market now, right? Look at the capital markets now. Stocks. What stocks are doing well? Zoom, Teladoc, right? All these like working up, right? Like Blue Apron, just
back from the dead,
right? 500%. It's grown in the last because of this situation. So so the thing is, it's like, you look at that and you're like, okay, if I can take that model in a situation like this, and then can you imagine those companies in a booming market, right? It's going to be not double digit, triple digit, maybe quadruple digits, right? And so those are the type of companies that investors would love to take a look at. And so here's the other thing that I wanted to mention. So what does Airbnb, Uber, Dropbox, right? Credit Karma, which sold for $8 billion to Intuit, IBM, Disney, Microsoft, Apple, GE, GM, HP, Facebook. What do they all have in common, right? They started in a recession, all those companies. And and you think about that, it's like you get a company that, regardless of the economic environment, are just killing it, right? And so all those companies that were trying to raise money, they weren't hitting the numbers as like the Airbnbs and Facebooks were, right? When Facebook started, like those guys were growing so fast that like they would have servers crash, every night, right? In a recession or not a recession, like investors always take interest in those kind of companies, right? That being said, there's a lot to say about like when the stock market crashes, and what does that mean? Yeah, there's not going to be any companies that's going to go IPO, right? And then the M&A market slows down, right? That's just, they always say when the top freezes, everything else freezes, right? And that makes sense, right? If you're an investor, if you're in an environment where there's IPOs that's happening, it's taken in 1990, 98, there were literally IPOs that's happening every week, right? And then they were shooting to the moon. And so then investors get real excited about that, right? So IPOs, that's sort of the movement of capital. It's the stream is moving. When that stops, everything else stops, right? And then all the way to the little guys who are investing, because they're looking downstream, right? To say, hey, I invest in this company, and now I want to refer this to my investor group, or to this institutional investor that I'm a scout in, right? Like they all see, like, if that stream is moving fast, then there's more activity that happens. But if it's not, then everybody sort of freezes. It's kind of like that's kind of like the one of the pitfalls of this environment, right? Like everybody gets scared. There's a herd mentality almost, right? And unfortunately, we're sort of in that environment now.
Yeah, thanks so much for that, Brian. I mean, you've given us a lot of golden nuggets here, So we're generally, Jason and I are optimists, and Brian, from everything that you've shared, it seems like your mind is just laser focused on opportunity, right? Talking about how almost all of these big companies started in recessions and filled some void or need that was in the marketplace during a downturn, where these big companies, they experience layoffs, they're contracting, and it's actually a perfect time for you to basically explode out of the gate while your competition is basically taking a back seat. So, where would you say specifically? And we could put people in sort of two different camps, so to speak. One camp being somebody who is limited with capital. Where can they sort of find that opportunity and embark on a venture, for instance? Where do you see that with all of your experience, if it's a specific industry or whatnot? And then the other camp, so to speak, is there are people maybe who have perhaps been saving for a while, or they just liquidated maybe their 401k or whatnot because they wanted to get liquid. And where would they be able to basically put those funds to basically seize an opportunity here? Like Warren Buffett, for instance, has been waiting for a crash for a long time for him to be able to clean up. This is how he makes his living and has created billions of wealth for himself, when there's blood in the streets, so to speak. And would you say that they're like alternative investments like startups are actually really attractive now, given the volatility of the stock market and that not being such a safe investment, or real estate, for instance? And I know that you mentioned, if you're pre-revenue, for instance, a startup, that the first thing you want to do is try to show some traction, get some revenue. But are there opportunities that people can sort of take right now, whether it's these startups that haven't really shown much revenue or aren't showing double-digit growth because they just need the capital to be able to get that traction in the first place. Market, where would you say the opportunity is, now?
Yeah, that's that's a very tricky question, only because right now, folks are kind of saying that we haven't seen the worst of things yet, right? And so, I would say, I mean, if you're asking my opinion, I would say, wait, wait it out for now. If you ever looked at the 2008 to 2018 those crashes, you notice that there would be like a quick, a fall in stock market, and then a little, they call it a dead cat jump, a dead cat jump, which basically it goes up, but then it goes farther down. So typically these recessions don't happen like overnight, right? It's usually like many months, right? So it's not like 2 or 3 months where it crashes. It's usually 6 to 12 to 24 months of like of the risk, of the economy. Or at the bottom when the bull market starts, right? I mean, the technical term for recession is actually you have to have 2 quarters of the stock market going down. So I guess, so to answer your second part of the question, when you asked about alternative investment, I'll get to the first part a little later, but the alternative, so where would you put your cash if I understand it, like if you're younger versus like you're much older with a lot more, skin in the game, I guess, right?
More dry powder.
Yeah, dry powder, right. Well, everybody has dry powder. They're sort of like in cash right now, right? Because they kind of liquidated sort of their investments to cash. I would say, like, if you're young, you actually have a good advantage, because you can actually have, you're 21 to 30. I would even say that age group. You can make your mistakes, now, right? Because, when you start all over on 30, like you literally have a lot of time versus someone who's like in their 40s, 50s, of course, right? Like they're near retirement. So when you're young, I would say like now is kind of the time to sort of try different things, right? Especially if, and there's no shame in this, especially if you're living with your parents, right? They're paying for the bills, they're paying for rent, paying for your food. Like you can literally start companies with your friends, right? Without too much risk involved. Somebody who has a family, a mortgage, not so much, right? And so that's where you kind of see this, where you'll see folks that are entrepreneurs who are much older, they start taking less risk. They may have more money, but they're a lot more conservative in their choices. And so I would say if you're young, start. You literally have a blank sheet, right? You can literally start companies. You could invest in like cryptocurrencies, right? You can invest in like these alternative investments. Even if you have 1,000 or 5,000, like that can get you a long way when you start investing. So let me just give you an example here. I remember about 15 years ago, where I had gotten a tip, and they were saying, "Hey, you should really invest this company," and I put $2,000 into that stock, right? And that stock happened to be Netflix, right? So that $2,000 like literally went up 3,000%, right? In the next 10, 15 years. And so like now that's like a big chunk of my portfolio just for that small little investment, right? And so like nothing's stopping you guys from doing the same, right? Like, you can put in small investments, high risk investments actually, right? When you're young, and really, if like one of the 10 shoots to the moon, there's a saying that even in the investment world, like everybody they try to invest in companies that they think all of them are going to shoot to the moon, but in reality, it's usually like that 1 or 2 investment that will return the entire value of the fund plus more, right? And so that's what you kind of have to be thinking about when every type of choice that you do, right? Like even with if it's a career choice or investment choice, whatever it may be, you have to be thinking like, with compounding, like how, if I invest into something now, would that be, compounding value later in the future, right? And I think that should just be sort of like your frame of mind. Now, if you're much older, you got to conserve cash, right? So, especially in this environment, I'm in the blockchain space, and uh, you know, when they say like you got to conserve cash, it's like okay, hard assets, right? Gold, silver, and I mean, I would say Bitcoin. The thing is, the problem with Bitcoin right now is that I've been watching sort of like how it's been behaving in this environment, and like for the longest time, the folks who were the Bitcoin community, they always say like, oh no, it's a safe haven, right? Because like when the Fed starts printing trillions of dollars, people are going to realize like I gotta put my money where it's going to be very stable. And then if you look at Bitcoin, like how many coins that are ever produced, right? So that should just be some form of stability. But then when people hear that, they're like, okay, I'd like to put my money into cryptocurrency, and they look at the charts, and it's like, dude, it looks like the stock market now. Like, how do you consider that like safe haven? And so something, if you're older, like something major will have to happen in order for those sort of like hard assets like gold and Bitcoin to really take off. And in my opinion, it would have to be sort of like a new financial system will be emerging, right? And anyways, and I can talk about that later when you start asking questions about blockchain. But yeah, if you're older, then you just have to start. You just need to conserve capital.
Yeah.
About your first question, though, I wanted to say that because you said the type of companies that you should start thinking about, especially if you're young. You should check out my interview with Ted Leonsis. So Ted Leonsis is the billionaire who owns the Wizards, the Capitals. So I interviewed him for Startup Grind, and there was one thing that he said that was really interesting to me, and it kind of kept with me about how you should be looking at your business ventures and sort of things that you should be thinking about of creating the next sort of Facebook. But he said that he looks for companies that are quote unquote mashup artists, that are run by mashup artists. So basically, that all that really is that, like he was saying, don't invent a new business concept, right? Like, if you ever see like Uber, Facebook, Instagram, right? Those companies are not like brand new business concept, right? Like Uber, shuttling people around. I mean, that's been around since the dawn of mankind, right? Like
Right.
Facebook, right? Facebook, bulletin boards, community boards, right? That's been there for
Better mousetrap, right?
right. Instagram pictures, right? Kodak was capturing a moment. Instagram's the same thing, right? So Ted Leonsis was like get a old concept that's been with mankind, but mash it up. So like there's, I would say, a catalyst. So what I mean by catalyst is take something old, but all the new stuff that you hear about, like AI, blockchain, VR, right? Cloud, 5G, right? Like how does you can literally just have a creative session where it's like, what does a bulletin board look like, right? Community bulletin board with AI, right? Like, or a bulletin board with blockchain, or a bulletin board with VR, right? So I just gave you 3 ideas there, right? Like, but there's nothing new about it. It's still the old concept, right? That's taking sort of this new catalyst that these buzzwords people are talking about. So every time these startups always come to me, they're like, "Hey, do you think this might be good? Do you think investors would be investing in this?" I would say, look, investors always want to be investing in something new, but the new thing is that catalyst, right? So hey, we're Facebook with AI, we are Instagram with AI, right? We're Uber with AI, right? Like now, has that been ever invested in before, right? Because if it hasn't, then you'll get people to be interested in investing in your company. So,
Very interesting stuff. Yeah. And Jay, I saw a light bulb go off when you mentioned Netflix and the return. I know you calculated the returns instantly.
yeah. Yep.
Yeah, exactly. So Brian, obviously a lot of golden nuggets here for anybody looking to start their own company, for instance, like you're talking about being a mashup artist and finding some opportunity in what's going on in these times. But in terms of your historical roots, you actually, a lot of people would be surprised. You came from a military family. They would think that you were born in this, startup, culture kind of thing. But tell us a little bit about that and why you actually didn't decide to follow that path.
Sure. And my answer would be I actually did, but in a different way. So what I mean by that is, I'm an Air Force brat. My dad was a physician in the Air Force. We basically moved, not as often as a typical military family, because physicians, what they do is they try to keep them in one place because there's a correlation of if there's too many movements, there's they become a little dissatisfied because they want stability in their family. So then, if you keep in one place, the better. So I was in Georgia and then Maine. Those were the only two places. And I remember in Maine when my dad, he actually was friends with the base commander of the base, and he was like, I come from the 3-boy family, and he's like, hey, and he's he was a colonel, right? He's looking at all, these 3 little boys, and it's like, hey, you guys want to join the military? And we're like, yeah. And he's like, well, I will give you some advice. It's like, and then we're like, yeah. It's like, well, do you want to build cool stuff? We're like, yeah. And he's like, well, then don't join the military. And we're like, what? And he's like, what you want to do is you want to work for the Beltway Bandits. And we're like, what is that? What's a Beltway Bandits? I didn't know that term until later when I actually moved to DC. And Beltway Bandits refers to the highway that surrounds DC, 495, and that's the Beltway. And the bandits are actually the government contractors. So the government contractors are the ones who are actually the ones who build stuff for the government. And the government, what they always do is they always put these procurements out, right? These solicitations, and say, hey, we need for you to build this for this price, right? And so what's nice about that is like it's budgeting, right? And so it's like, when you go to Congress, we're like, hey, we need this budget. Okay, here's the budget for this program, and then here's all the sub programs, right? And you can just put a limit on it. It's like, hey, for this project, this is only going to be $5 million. End of story. Right. And then basically like piranhas, like all the government contractors, they just like try to like bid it. Right. And so that's where I was. I was, actually I worked for a government contractor. Then I started a government contracting company. And basically that was like really a really interesting way of like really helping out your country. But at the same time, doing some really cool stuff, right? Actually building stuff. And so after I did this, one government contract I actually did with my father. This is where I sort of got to understand how to grow business, because at that time, in 2001, this is when 9/11 happened, and there was a new set of so George W. Bush was president. And what happened as a result of 9/11, he created this new, what they call set-asides, right? And in the government, that's their way of saying, hey, instead of giving, 100% of our business to the big contractors, we will set aside 25% of this to small business and make this more representative of the country. So, can we put it to like veteran-owned and women-owned and 8A, these are minority-owned, and ANC, which is Alaskan Native-owned, right? So we actually grew a business that was a service-disabled veteran-owned business. And so that's where I sort of kind of learned the ropes of like how to actually run a business. And the thing is that yeah, it's a little less sexy, right? Running a government contracting business versus say like a Silicon Valley based, which is product, right? SaaS based type of companies where you build something and you rubber stamp it and you try to scale that up as much as possible. But the reality was, especially here in DC, they always say like the richest. So if you ever take like the set aside, so as a group all over the country, if you take women entrepreneurs, minority entrepreneurs, veteran entrepreneurs, right? The ones that have that have the most wealth, I guess, so net worth happens to be in the DC area, and it makes sense because it's like that's where all the GovCons are. So so back to your question, yeah, I actually didn't join the military, but I did serve in other ways, like providing them the tools to make them a badass military.
Yeah, so this is a wealth of knowledge. For instance, if Brian, if somebody has a really good idea, they're working on something tech related, health related right now, and you hear about the bloated government contracts that the government sort of pays for whatever it is, a different department or different technology that they're instituting, and they want a piece of that pie. How do you go about getting a government contract secured? Do you need to know somebody? Or is it as simple as applying online? What is that kind of process? Do you have to have a license for it? How do people take advantage of the bloated government contract, so to speak? Because a lot of people are aggravated at how wasteful spending. But if you could be a beneficiary of that wasteful spending, you're not going to complain as much.
Yeah. Oh, that's a really good question. I mean, if you ever talk to any government contractors and when they started, and ask how they started their business, I'll be willing to bet you across the board, especially if they're a small business, not retired general who was on the other side of the table giving out contracts, and now he joined the government contract to sort of like what I mean? Like now he's on the other side of the table. And it's like, okay, you guys used to work for me. Okay, let's go get this $1 billion contract. So many of us don't have that opportunity. So most of you would be like, okay, I'm a small business. How do I get my feet in the door? And if you ever go to these like sort of these SBA seminars, and you'll hear them consistently say this. Obviously have a service that's going to be useful. Get on the GSA, get on some contract vehicle, right? But really, what's most important as a small business is what they call set asides, right? So, as I mentioned a little bit before, there's a pecking order for these certifications, right? And so, if you imagine, like in the government subcontracting world, like these big primes like Lockheed Martin and the Booz Allen, like they have no problem in getting contracts and getting work for themselves, right? But the government always mandates, they always say, okay, 25% of this work needs to, it's required, needs to go to small business. So then Lockheed Martin says, oh crap, okay, well, are there any small businesses that can do this type of work, right? And so it's like, oh yeah, I'm a small business. Okay, but then just imagine this. I mean, that's a very saturated area, right? So then they start cutting more divisions there, or these categories, or they call set aside. So they'll say, hey, is there anybody who's veteran owned? And you'll see a lot of people say, hey, I do it. Okay, wait. Okay, that's easy to get. How about women owned? A lot of people, maybe a lot of women will say I can do it. How about 8A? A lot, but little less. How about Hub Zone? A lot less. How about SDVO, Service Disabled Veteran Owned? Very small. And then then they say, hey, how about ANC, which is like Alaska Native Corporation? Nobody, right? And so the thing is that that's kind of like the law of competition, right? Like they're going to look for certain companies that they have a hard time recruiting. And so they always say, try to get the set-asides and as many as of them. So if you could be a woman-owned, an 8A, and a Hub Zone, all three, you look a lot more appealing than, say, a veteran-owned small business. So it's really all about these set-asides, especially for a small business. And so that's usually the strategy most of them will take. Now, there's the other side of it, where if you're a non-government contractor that's trying to look for government money, right? So they got programs like they call SBIR and STDR, right? And really what that is that was a way for the government to set aside R&D. So if you imagine R&D money, Lockheed Martin's of the world, they're creating, technology, and it's top secret stuff, and they're creating like really cutting edge technology, right? But again, same thing. 25% of that has to be set aside, to small businesses, right? And so these SBIR, they'll say, okay, we're creating like, I don't know, transport machine. Is there any small business that can build this part of it, right? And so the SBIR program, STTR program, are actually non-dilutive grants. So it's like almost as like you get money, but it doesn't have an impact on your equity. It doesn't dilute it. So actually SBIR grants and STDR grants are actually the best ones to get for a small business and to work on cool stuff. Now there's other ones, other agencies like the NSF and DARPA. They also have their grant program as well. and for DARPA, like I had Peter Heinem, Dr. Peter Heinem of DARPA. He was the deputy director then. Now he's the director. And if you guys want to know a little bit more about that, just look up my Startup Grind interview with him. But there's a way to like get funding from DARPA as well, right? So DARPA has all these different projects that are, really for small business, right? Researchers to work on the coolest stuff, right? So, DARPA, that's where, laser, GPS, microwave, right? Duct tape. That's where it all came from, DARPA. So you want to look there if you're looking at really cool, you want to work on really cool technology that could be applicable into the commercial space. And then there's the NSF grants and by the way, there's literally hundreds of these, but I'm just kind of highlighting this because I've kind of worked with these folks. But the NSF grants are like, they actually have this thing called the Nsf Convergence Accelerator, where like if you are an institution that's working on a cool tech, but then you want to create some sort of like lean startup like approach, MVP, creating a prototype and then putting into sort of the hands of customers. The Nsf Convergence Accelerator will help you do that. So they have different phases. Like first phase they'll give you $500,000, and the second phase they'll give up to $5 million. But you want to look at all these different programs to sort of how can we get money from the government, because their job at the end of the day, the government is trying to create jobs, right? And so if you're creating technology that could become marquee industries, like of course they when they put in $5 million, of course they want to do that, right? If this could become a $5 billion industry. So
Brian, let's kind of come full circle. You talk about really cool technology, finding ways to make money. It's interesting to get an insight into the government contracting world. That's a unique perspective that I think a lot of listeners will find intriguing, and maybe there's opportunities there for them to open, depending where they are in the country and what kind of technologies and ways of working. But one of the topic that we wanted to close on was actually, it was something on our roadmap initially to spend a lot of time on. And we figure let's, especially since we've got the good privilege of having you on the show, 2020 has been a new relationship that we've had with blockchain, right? We've seen it. You talked about it a little bit already on the show. I think there's more than 2,000 cryptocurrencies out there now. They've said it's kind of a make or break time for Bitcoin. It's facing a big test, clearly, with the recent market cycles and the wider crash we've just experienced. So going forward, right, what are you seeing in terms of truthfully the future of Bitcoin and blockchain from your perspective? And do you see it going into a cycle where it's really going to take off and prosper, or is it going to be kind of in this intermediate layer? What's the perspective from Brian Park on this at the current moment?
Sure. If I knew the answer, I wouldn't be here talking, right? I actually had an entrepreneur who was almost a billionaire. He made $100 million, and I was like, hey, like did you sell it for $1 billion? And he was like, no, if I did, then I wouldn't be here, right? Like I would be in my island thing somewhere else. So my opinion about Bitcoin is, so coming from an engineer point of view, right? Blockchain, and it's really more of the perspective of decentralization, right? And so here you have a piece of software that's pretty much downloaded by anybody, right? So in the early days for Bitcoin, anybody could have downloaded. You could have, Jason, you could have downloaded your the Bitcoin software and start mining on your Pentium 5. Believe it or not, in 2010, you could have done that on your junky Pentium 5. And actually, my friend did that. And he actually ran the software, and he forgot about it. He forgot about that he had it. And so, and this is when Bitcoin was like 0.000. I mean, it was like nothing.
I've heard stories about people that kind of forgot and later were searching everywhere to find those devices to extract the coins.
Right. And so then he forgot about it, and then he went back and he's like, oh wait, like my Pentium 5, like how many Bitcoins did I mine? And he found out he mined 800 Bitcoins, right? Like think about like the ROI on that junky Pentium 5, and so
still not up to par with your Netflix investment, though.
Yeah.
I got printed out. I've got it on my desk here for motivation during this downturn if I feel hesitant or chicken about a stock. But keep going. I'm following you.
Yeah. So the Bitcoin is the asset that's outperformed all assets in the last decade, right? It's the number one, right? And so being that said, where folks are downloading and forgetting to download, and then we're seeing some technology where not so. I mean, obviously, Bitcoin, the requirements for running a node is a lot higher, right? Because you got to be spending thousands of dollars. But there's technology where they're doing things where could you distribute even that more, right? So can we shard computing power not just through like servers, but can we do it through mobile phones, right? So you downloading a software, you forgetting about it. Now you are an active participant of that network, right? And like I always say, like in decentralization, and you have a software like Bitcoin, it's literally like herpes for the internet, right? Like you can't get rid of it. Like it's going to always be there. And the moment that you kill Bitcoin is when the last miner is not mining, right? Otherwise, it's still up, right? And so. This is just blockchain in general and decentralization, right? And so where my mind is that, where could this blockchain revolution go? And you have to be thinking it not from a technology point of view. You should always be thinking it from a societal point of view, like being useful in bringing value to society. And so, like now you see sort of like our economy now, and we're hitting, the stock market's crashing, and you see like, the U.S. economy is actually a very service-based intense economy. Service-based. About 67% of the U.S. economy is service-based, right? And so, I'm just trying to think. Like you have sort of that dependencies on that sort of the economics of that, and then when you have something like, I'm trying to think here. Where I was trying to go with thought. I have a stream of thought here, right? So. The thing is that so back to the Bitcoin here is that you have a piece of digital property that's constant, and then when you have like say the federal government that's printing unlimited money, and eventually like is that now going to sort of hyperinflate that value, right? Like think about it, right? Like you can print the dollar as much as you can. What's that eventually going to do the value to that fiat, right? Hyperinflation. But then you have something like Bitcoin, where exactly what is the backing of that. There's only 21 million coins that will ever exist, and the supply is slowly like dissipating. And every time people put $1 into it, that will only increase that the value of that commodity, this digital commodity, right? And so, would we see a society where that now what we call the fiat dollar is now overinflated, and then people are now rushing, okay, where can I now put this other than fiat dollar? It's either going to be gold, it's going to be hard commodities, silver, right, palladium, whatever. It's going to be those hard asset, or it's going to be in the cryptocurrencies, right? So now it's like Fed already printed $6 trillion. People are saying that that's going to go up to 30 trillion. And now the Fed is now talking about stable coins with the central bank digital currencies, right? And so I have my theories about this sort of about the CBDC of where the Fed is printing trillions of dollars, and really what happens is that if they're printing out this much money, like what does that mean to the Fed? What does that mean when they're pretty much like dollarizing everything? They're kind of spreading out the dollar as much as they can. Then you're going to get a lot of folks that are that the Fed just becomes a stronger entity, right? And so so it's just very interesting to see the whole central bank digital currency and where that's going to play out, because could there be a situation where in a switch, the Fed can say, all right, let's get on this new digital currency, right? Which way you can track, you like, it's not like the cash, right, where it's harder to track it, right? It's now exactly where each of that currency is going, right? And so there's a question of like the power balance, and you got the U.S. government, but the Fed is just only a part. So the Federal Reserve Bank, the U.S., but then there's other banks as well, and then when you hear about like, okay, the Fed, the central bank's becoming very powerful, like, okay, who's running the central bank? Who owns it? Right? Like now you're really realizing, oh, this is really interesting. Like, who's doing this? Right? Are they elected?
Brian, I don't mean to interrupt you, but a lot of people don't know that they were actually trying to pass legislation in the stimulus bill, if you read up on it, in Forbes, for instance, where they were trying to institute digital.
That's right.
He got so excited we lost him.
Oh, here I'm back. I just turned off my video.
Oh, all right. I'm sorry. Did you guys hear me? Anyway, Brian, what I was saying is that they were trying to pass legislation in terms of instituting a form of digital currency for people who are receiving stimulus payments. So I'm interested to hear sort of your take on that. And for those who, there's a lot of people who believe in the blockchain technology itself and see a lot of promise there, but they don't really know the value of the individual cryptocurrencies, if they should invest money there, for instance, and if those are going to really take. And there's some theories out there that these are just, these could perhaps be just trial runs for a one world government digital currency, so to speak. So, what would your sort of, take be on that?
So since I'm on a public podcast, I'll temper my my opinions. I couldn't agree with you more. The thing is that, I know I'm generally not a conspiracy theorist, right? I think like there's good intentions in people and governments, and they want a peaceful world. If you look at history in the past, where power is now, relegated to not just the 1%ers, but the 1% of the 1%, that's where you see abuses happen, right? And so, what is the central bank, right? Like, are they people that we elected? Right? Like, I mean, you get heads of the central bank. So you got the ECB, you got the.
And Trump is sort of, firing at them on Twitter, and there's debates and cursing matches about the Fed going on Twitter right now, so it's interesting.
Right. I mean, even the presidents of these banks, they're. I mean, it's like a company, right? So the CEO, people say, oh, the CEO runs the company. No, it's the board, right? Because the board can fire ass, right? And so the central bank is kind of the same way, and you're realizing, like, central bank is printing all this money, or treasury, printing money, and then central banks buys it. I mean, what is the central bank doing now? I mean, I've been hearing speculations that they're actually buying, companies directly. They're buying stocks directly. I mean, you see sort of the 10-year yield, and that's telling you one thing, and then you see the stock market going up, and you're like, wow, those are two diametrically signals. They're saying two different things. And if you're going to be believing the stock market versus the 10-year bonds, I think it's pointing to, yes, flight to safety. And we sort of had, again, I'm not a conspiracy theorist, but people are saying that the Trump bubble is gone now, and now, like, so that's the 30%. People are now saying, well, we still have more to go because it's called the Obama bubble, right? And that's kind of like when the quantitative easing started happening, like, in full force, right?
Oh yeah, and if people just do a little research, we were doing quantitative easing in the number of hundreds of billions, practically every single night. That was just, and for anybody who doesn't know that, it's just basically loosening the restrictions in terms of the money that banks have access to be able to theoretically lend out or whatnot. But it's just basically printing money, and you can elaborate a little on that, Brian.
Right. So I mean, basically, the bottom line I'm trying to say here is like, this environment calls for essentially like a brand new financial system, right? And and the feds, they're sort of the most powerful organization. So, like, what's stopping these guys from like putting on a switch and requiring everybody to be on a new system, right? And could that be CBDC? I don't know, right? Like, could that be its new sort of monetary policy to sort of I don't want to use the word control, but control the world. But on a lighter note, the blockchain technologies that we're looking at, besides sort of these like CBDCs, stablecoins, we are looking at the DeFi space, which is really decentralized finance, right? It's not centralized like you would see in a CBDC. It's like it's Bitcoin, but then the whole infrastructure of the currencies, right? Where more the things that we're with SparkLabs, we invest in this company called Dharma, and that's like number 3 or 4 on the DeFi. But ultimately, what it is it's not a new concept. It's an old concept. It's P2P lending, right? And some in this kind of like community of cryptocurrency, there's this word called hodling, right? So hodl, hold on to your dear life, but it really was like hold on to your currency, your cryptos. But that's all they could do right now before this DeFi revolution came about. And so, like, if I'm holding, say, ETH or DAI, or I'm holding this crypto, but I'm just sitting on it and waiting for it to like go up in price. Are there other ways that I could make money off of it? Yes, right. Like, if I sit on it, can I get a 1, 2, 3, 5%, APR on it, right? And so that's kind of like what this whole DeFi. And oh, by the way, it's a movement to make this completely decentralized. So again, with sort of blockchain and like the Bitcoin, like same thing with Bitcoin, you can't shut it down, right? And so you have sort of this P2P lending platform where you can't shut down, and then now there are transactions happening, and then you can make you can make money off of hodling, holding onto your crypto. Oh, all without actually having a fiat bank involved, right? So DeFi, like we're very like bullish on in that space, and we're continuing to see innovation that's happening there. And then there's other things like cross-border payments and identity and things like that. But really the DeFi space is what's going to really sort of be the killer app for blockchain. And so actually, before we end, I wanted to actually sort of mention about if you are a blockchain company out there, there are grant programs depending on what blockchain platform or protocols you guys are using. There are grant programs. So like if you are on, just to rattle off some like EOS or Binance, Ripple, 0x, they all have grant programs. So like look at those programs, look at those grant programs, and all you have to really do is just submit a white paper, and in return, you could be granted $150,000 of their tokens, which you can basically you can convert those to fiat to help you finance your startup.
Wow, this is a wealth of knowledge for people, Brian. Thanks so much. We really appreciate having you on here on Made for the Moment, and we really just love this insightful information and a deeper dive of what's going on in the startup community, and your take and perspective on what's to come in terms of the economy and all these opportunities that people can take advantage of, whether it's ventures that they could start up and taking advantage of, like you said, grant programs, government contracts, how they could go about that. I mean, there's just, an endless amount of opportunity just listening from you alone. So really appreciate that. We got to have you back on the show at another point so that we could take a deeper dive into some of these topics, So thanks so much, Brian.
Thank you so much for having me, and I hope it was useful. Really appreciate it, Jaret and Jason.
Yeah. Jason just had to hop off for a quick interview right now. So, he sends his appreciation. Okay. Thanks so much.
All right. Thanks, Jaret.